Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, things are going pretty well. We've had some really good increases in commodities in China and Exelon, etc. But let's get into it. Here we go. This is the S&P 500, and my stop is up at 6,100, and we hit 6,114. So not really enough to warrant a uh, sell. So I'm still bearish on the S&P 500. You can see prices chopping around here going back to December. So I don't really, this is tops are not normally spike tops. Are usually rounded tops, and bottoms on the equity market uh, are usually V-shaped. So commodities are usually the opposite. So let's take a look at the weekly chart on the S&P 500. This chart on the daily goes back 6, 7 months. Now we'll take a look at a couple of year chart to get just a little different perspective. And here we are. So again, we're really overbought. We're outside of our bullish channel, the resistance line. You can see we've been traveling upside that. So, people really want to own stocks, and they're going to buy them. They're going to keep buying them until they get hurt. I'm not going to show the VIX tonight, but it has a negative divergence on the VIX going back, about 4 or 5 months. And on the S&P itself here on the weekly chart, you can see we have a negative divergence as prices have hit all these higher highs. We got lower highs going all the way back to early 2024. So at some point it's going to matter, and I definitely want to participate in that. So I'm going to stay bearish, the S&P 500. I want to see I'm changing it from a daily close to a weekly close above 6,100 to shake me out of this. I think I'm 1.5% down in this position. And I think the potential with a negative divergence like this uh, on the downside is significant. So I'm going to maintain that bearish stance. This is seasonality. It was funny in December, prices were supposed to go up and they went down. And then in January, instead of going down, they went up. Seasonality is showing a decline into early March. Again, this is just a tendency. I would never put all my weight into something like seasonality, but it's kind of interesting to look at. Okay, fixed income. I just did a short video on that YouTube a couple days ago, actually Friday. And so I won't spend much time on it, but here's the big inverse head and shoulders pattern going back a couple of years. And we got a nice breakout to the upside and now a retest of that. And then we have a bullish hammer last week. So, it's tedious, but we're up above the confluence of moving averages. We're above the neckline. Next week will be really telling on whether we get going here on the upside. My stop is down here at about, let's call it 90, and my price projection on the upside is 103, which is about 11% upside. Oops, what's that? Sorry about that. So I like to reward the risk here, and it was able to recover after during the early part of the week being selling way down to 92, was able to recoup and end at the high of the week. So next week will be really telling, but I'm staying bullish on the 7 to 10 year Treasury ETF, IEF, and most other fixed income also. Not so much high yield, more into conservative fixed income. As the market gets dicey, people in the past have gravitated towards treasuries, so we'll see. But this 10-year is my maturity of choice given the nice bullish pattern here. Microsoft, we got stopped out. So I'm out. I hate getting stopped out by such a small amount, but I'm going to take my loss, put my tail between my legs, and crawl off into the corner. Luckily, we have some other big winners that will offset Microsoft. Now, one other thing with Microsoft is I have been talking about. Microsoft is a bellwether stock. You know, the market is not going to do well without Microsoft being a part of it. And if you look at Microsoft, Nvidia, Google, all of those stocks are breaking down. So, could they rectify and turn up and, shake me out here and go higher? Of course they can. But I've given this as much as I can give it. You can see the original triangle pattern here that it broke out of. And then when it came down here and had a bullish hammer, I thought, well, maybe I could redraw this triangle and connect. And maybe this is developing into a bigger triangle. And now we're a little bit lower than that. So I'm going to get out of this and we'll see what happens with Microsoft. But it's not a great omen for the market. Also, the point and figure chart, the X's and O chart that I reference a lot, which are less subjective than these charts that I draw uh, is bearish, has a bearish trend line now. So I don't like going against point and figure charts. So I'm going to take my loss and move on. Luckily, we had a big winner and EXCELON. It's been doing really, really well. Here's the descending triangle. This was the resistance line. This was the support line. This was a one, two, I don't know, 2.5 year pattern, really well constructed. And we got the breakout, and then we had a pullback, and I went to a buy rating here back on November 18th. And now we're up around 43, and the price projection based on the pattern is 51. So I like this. We're getting a little bit overbought, not quite there. This is overbought. So it should push higher here, especially if treasuries hold on and we see higher treasury prices and lower rates, which is contrarian to what this where the street is right now. You know, they think rates are going higher and eventually rates will go higher. I just think uh, short term over the next several months, I see hopefully fixed income, the price of fixed income securities will go up and the yields will go down. China had a big week, up 7% this week. FXI, these are the large cap China ETF. And, again, this looks really good. You've seen the larger chart of the Shanghai index, which has the possibility of some big, big, big upside to FXI. This is just a vehicle that I'm using to participate since you can't buy directly in the Shanghai index. So this looks great. Silver, it was up 3% last year, last week. So the market was up, I don't know, 1.8 maybe for the week. But you're looking at things like Exelon, you're looking at things like, some of the silver, up almost 3% last week. That's real alpha. And I know a lot, China up 7%. So, I'm feeling pretty good about the picks. I know I've had some comments about people unable to buy commodities or commodity ETFs because maybe it's in their 401k. I mentioned several months ago that I really think this is going to be similar to the 70s where we get big moves, big, big, big moves in commodity prices. Like look at silver. This is a big, what is that? 2009, this pattern started developing, a big symmetrical triangle. So that'd be that's 16 years, 15 years in the making before it broke out. And the price projection based on this big symmetrical triangle is 64. That's a double. That's more than a double. We're already up in this thing. And so I equate this to the 70s where you're going to see commodity prices soar, you're going to see the equity markets kind of soft, and the equities that I'm going to look to get into and I can't yet is some of the mining, some of the material stocks that are going to benefit from these things. So, there's a hoarding going on in mines, all over the world. China's been buying a lot of our mines in South America and other places. And these natural resources are going to be worth a lot of money. So I know that's more than you wanted to hear. So here's silver, though. It looks good. Gold looks overdone. It looks like it could pull back here for a week or two. If that happens, most likely silver pulls back a little bit. So, let's take a look at copper. Up 128. It was up about 3 or 4% Friday morning. It was up to over 30, which of course, what do I do when I have a big up week like last week? I sell some. What do I do this week when prices were really high up around 30 and up by this resistance level? I'm selling some. And we have a doji star here, which is in Chinese and Japanese candlesticks is the psychology of this bar is it reflects indecision, and it makes sense because this again is a big 2.5 year ascending triangle with a rising support line and a flat resistance line, and here we are. Oops, I'm sorry. Here we are hitting our head on the resistance line, so that would be a natural place for prices to stop, um, and maybe have a little bit of weakness. So again, whenever you have big up weeks and everybody's excited about things and you hear it on TV, sell a little bit. And when people don't like it because it's going down, you want to buy a little bit. I still think this is going much higher. You can see this smaller ascending triangle within the larger one. Remember, we got involved because of the small inverse head and shoulders pattern back here, and we sold up here, and we bought, sold, bought, and now I'm going to stay with a bullish rating because of the symmetrical triangle here, the smaller one. This has given us a $34 price projection, which would break us out of this larger ascending triangle. And the ascending triangle, if we are able to break above, let's call it 30.5, would give us a $42 price projection. And I want to take a look. So again, this is a 2 year, 2.5 year chart. I want to take a look at even a bigger chart of copper, not the ETF, CPER, because that's the way that we participate in copper. But we're going to take a look at the actual copper index, and here it is. So again, we got this looks like silver, right? We got a 15-year pattern that we're getting ready or very close to breaking out of. Here's the triangle that got me involved back in 2024. And so once this breaks out on copper itself, it would give us an $8 price projection, again, and double from where we're at now. The inflation on these type of things will be astronomical and would not be good for growth prospects for a lot of the economy. So, there's a lot of good information here. I hope that it's helpful to you. Platinum, again, it's still in its big, I'm sorry, a symmetrical triangle. Not a lot to say here. It was up a little bit, up, 0.75%. It's been a little laggard as far as some of the metals go, but it's all still in place. We still got our 82.5 stop, and that's where we're at. And T-bills. So when you got cash, let's say you own Microsoft. Let's say you decide to sell half your Microsoft. What do you do with that money? Stick it in this ETF, TBIL. It's 3 month T-bills. It pays 5.25%, I believe. And you get some of that dividend every month. And you can see it was up 0.1% last week. This is pretty much risk-free, so as risk-free as it gets. So I think that's a good alternative. There's other things, some of these mining material companies that I want to get involved in. They had up weeks this week, so it's not a good time to buy them. But if we get a pullback next week, you'll see me initiate one I'm pretty interested in. But thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. It would help me. Thank you very much. I hope you enjoy this. Have a great rest of your weekend.